Ever wonder why some people seem to have their financial life in order while others struggle? The answer often lies in setting clear financial goals. It's not simply about dreams or wishes, it's about creating a strategic blueprint for your financial success. To start, identify your short-term, medium-term and long-term goals. Maybe your short-term goal is to create an emergency fund, or your medium-term goal is to save for a down payment on a house. Your long-term goals could include planning for retirement. Let's talk about making these goals SMART, which stands for specific, measurable, achievable, relevant, and time-bound. Instead of saying, "I want to save money," you'd say, "I will save $5,000 in the next 12 months for a down payment on a house." By doing this, you make your goal tangible and set a clear target for yourself. Once you've outlined your goals, it's time to prioritize them based on their importance and urgency. This will help you focus your efforts and resources where they matter most. Remember, not all goals are created equal, and it's perfectly okay to have different priorities at different stages of your life. To make your goals more manageable, break them down into smaller, actionable steps. If your goal is to save for an international vacation, calculate how much you need to save each month. This not only makes the goal less daunting, but also allows you to celebrate small victories along the way. Life is dynamic, and your financial goals should be too. Regularly review and adjust your goals as your life circumstances change. Being flexible is key to maintaining a realistic and achievable financial plan. Finally, consider sharing your goals with someone you trust. Accountability can be a powerful motivator. Having someone to share your progress with and provide support can help you stay on track, especially when faced with challenges. Setting financial goals is your first step towards taking control of your money. It's more than a checklist, it's a dynamic process that evolves with you. Stick with it and watch your financial dreams turn into reality. With your financial goals in place, it's time to power them up with the art of budgeting. But what exactly is a budget? It's a plan that gives every dollar you earn a specific role in your financial journey. It's the bridge between your income and expenses, the guide that helps you navigate your way towards your financial goals. Let's get started with the first step, tracking your expenses. For about a month, keep a record of every dollar you spend, whether it's on rent, groceries, or that fancy latte you treat yourself to every now and then. It's a simple step, but it's powerful. It gives you a clear picture of where your money is going and helps you understand your spending habits. Next, categorize your expenses. This means dividing them into fixed expenses, the ones that stay the same every month, like rent and utilities, and variable expenses, which change from month to month, such as groceries or entertainment. This gives you a clearer understanding of what's necessary and what's optional. Then, it's time to prioritize and allocate. This is where you decide how much of your income should go towards each category. Always ensure that your essentials come first. But don't forget to allocate some funds to your goals and a little bit for fun. After all, a budget that feels too restrictive is less likely to be followed. Now, it's important to make your budget realistic and flexible. Life happens, and unexpected expenses can crop up. Allow room for adjustments so your budget can adapt to your changing circumstances. Regularly review and update your budget to keep it aligned with your goals and lifestyle. And that's it. That's the art of budgeting. Remember, the aim is not to limit your spending, but to empower you to make informed decisions about your money. It's about gaining control, not losing freedom. A budget isn't a financial straitjacket. It's a tool that empowers you to make informed decisions about your money. It's the fuel that drives your financial goals to their destination. Debt. It's a word that can send shivers down the spine, but not all debt is created equal. Let's demystify it. Debt often gets a bad rap, and while it's true that high-interest, unmanaged debt can be a financial nightmare, it's also true that some forms of debt can be beneficial. This introduces the concept of good debt and bad debt. Good debt is generally considered an investment that will grow in value or generate long-term income. For instance, taking out a mortgage to buy a home can be a good debt. The home is likely to appreciate over time, providing you with a valuable asset. Similarly, student loans can be considered good debt if they lead to a degree and higher earning potential. On the other hand, bad debt typically involves borrowing for things that depreciate in value or don't generate income. Credit card debt, for example, is often considered bad debt because it usually finances purchases of items that lose value. Plus, credit cards often have high interest rates, which can lead to a cycle of debt if not managed properly. The impact of debt on your financial health can be significant. High levels of bad debt can lead to stress, poor credit scores, and limited financial freedom. Therefore, it's essential to manage your debt effectively. When it comes to paying off debt, strategies like the snowball and avalanche methods can be useful. The snowball method involves paying off your smallest debts first, gradually working your way up to larger ones. This can provide a psychological boost and help keep you motivated. The avalanche method, on the other hand, focuses on paying off the debts with the highest interest rates first, which can save you money in the long run. Ultimately, the strategy you choose will depend on your personal financial situation and your psychological needs. It's about finding a balance that works for you. Understanding and managing debt is a critical part of your financial journey. Remember, not all debt is bad, but it's important to handle it wisely. Now that you've got a handle on budgeting and debt, let's talk about how you can grow your money through investing. Investing is more than just stashing your money away. It's about strategically placing your money in certain assets that can potentially generate returns over time. Let's start with the basics. At its core, investing is about risk and reward. The higher the risk you're willing to take, the higher the potential reward. However, this also means the higher the potential loss. That's why it's essential to find a balance that suits your risk tolerance. One way to manage risk is through diversification. Think of it like not putting all your eggs in one basket. Spreading your investments across different types of assets, such as stocks, bonds, and mutual funds, can help reduce the impact if one of them performs poorly. For instance, when the stock market is down, bonds might perform well, balancing out your portfolio. Now let's talk about the types of investments. Stocks represent a share in a company. When you buy a stock, you're essentially buying a small piece of that company. Bonds, on the other hand, are like loaning money to a company or government in exchange for interest payments over a set period, plus the return of the initial investment. Mutual funds are a pool of funds from multiple investors that are managed by a professional and invested in a diversified mix of stocks, bonds, or other assets. One crucial point to remember is the importance of starting early. Thanks to the power of compound interest, the earlier you start investing, the more time your money has to grow. Even small amounts invested regularly can add up significantly over the long term. Investing is a journey, not a race. It requires patience, discipline, and a willingness to learn. It's not about timing the market, but time in the market. And remember, it's never too late to start. Investing is a powerful tool for growing your wealth. It may seem intimidating at first, but with knowledge and patience, it can open doors to financial opportunities you never thought possible. We've covered a lot of ground today, from setting financial goals and budgeting to understanding debt and investing. So, let's take a moment to recap the key points from each segment, highlighting their importance in your financial journey. We started with the importance of setting financial goals, which serve as your blueprint for success. Remember, these goals should be SMART, specific, measurable, achievable, relevant, and time-bound. Prioritize your goals based on their urgency and significance, and break them down into manageable, actionable steps. Regularly review and adjust these goals as your life changes, keeping the journey flexible and realistic. We then moved on to the art of budgeting, your tool for financial empowerment. Tracking your expenses, categorizing and prioritizing them gives you a clear picture of where your money is going, helping you gain control over your finances. It's not about restricting your spending, but about making informed decisions that align with your financial goals. Next came understanding debt, a topic that can seem daunting but is essential in your financial journey. Not all debt is created equal. Some can be good and some can be bad. The key is to manage it wisely, paying off high-interest debt first and utilizing low-interest debt to potentially create wealth. Finally, we touched on investing basics, a crucial step in growing your wealth. Understanding different investment options, the power of compound interest, and the importance of diversification can help you make informed decisions that align with your risk tolerance and financial goals. And there you have it. These are the building blocks to a successful financial journey. Remember, taking control of your finances isn't a one-time event, it's a journey. I encourage you to apply what you've learned today and take that first step towards financial freedom. This journey is about empowering yourself to make informed decisions and shape your financial future. Don't forget to subscribe for more financial tips and insights to guide you along the way. Here's to your financial success.